Good morning from Chicago, the risk management capital of the world. I'm Alan Nuckman here at the CME Group with the Morning Market Stir for Friday, September the 9th, on a shortened trading week with the holiday on Monday. So stocks were steady on a weekly basis and down a bit yesterday, down 0.25% in the S&P, 0.25% in the Dow, and 0.5% in the NASDAQ. But let's remember that the NASDAQ made all-time forever highs on Wednesday. So a bit of unwinding there. The dollar was stuck at 95. The big mover of the day was crude oil. Again, delayed reaction to this dollar weakness. Crude oil was up 5% yesterday, a big push there. And so that market has stabilized and moved higher, now chasing gold. Gold was essentially steady, holding around the 1340 level or so, backing off a bit yesterday. The euro currency 112.60 did get as high as 113.30 yesterday on the no rate cut or rate movement in Europe, but did back off near the close. So after the steady market and sitting essentially unchanged on the week, where do these markets stand here on Friday morning? We're seeing a summer end break right now. We're seeing the stock markets down about 0.5%. In point terms, it's a big number, but let's remember these markets are at very lofty levels, so as we're looking at percentages. Right now, Dow futures down 130, the NASDAQ futures right now down 30, and the E-mini S&P down 14 as we get started on the trading session here today. We're seeing crude give back some of its gains, it's about 2% lower, down 90 cents right now. Gold, interestingly, is not reacting positively at all to the stock sell-off. Gold's down $5 as it stands right now. The U.S. dollar has firmed. It's above 95 right now at 95.25 or so. Interesting action in treasuries. Treasuries sold off yesterday, down again today significantly. Typically there's an opposite movement, so if the stock market moves down, there's a flight to quality, treasuries prices go up, but that's not happening today. The 30-year bond right now has moved to levels that it hasn't seen on the downside in more than 2 months. So that means long-term rates continue to tick higher, two-month highs in yield as far as the long-term end of the curve goes. So to summarize where we stand here on Friday morning as the cash market gets started, we are negative right now, giving back the gains for the week, down about 0.5% across the board, with the E-mini S&P right now down 15, the NASDAQ down 25, and the Dow right now down 130 as we get started. Alan Nuckman here at the CME Group, where it all comes back to commodities.